Well, life feeds there a little bit of disruption from the stock exchange where the market is just closing, bringing to end trading for today. That's day 3 of the week. Well, business editor Effiong Ekop will join us in the course of the show for more incisive analysis on today's proceedings at the Nigerian Stock Exchange. But first, let me welcome you to Business Nigeria. I am Tolu Lokpe Ogunjobi. A warm welcome to you again. Now, for the 9th consecutive month, the Consumer Price Index, which measures inflation, dropped to 15.91% year-on-year in October. The rate is lower than the 15.98% recorded in October. On a month-on-month basis, the headline index increased by 0.76% in October 2017. 0.02 percent points are lower from the rate of 0.78% recorded the previous month. This represents the 5th consecutive month-on-month contraction in headline inflation since May 2017. Well, another good news, World Bank report released recently indicated that Nigeria has moved up by 24 places on the ease of doing business chart. The World Bank Doing Business Project provides objective measures of business regulations and their enforcement across 190 economies worldwide. The World Bank highlighted 5 reforms that make it easier to do business in Kano and Lagos states. The 2 cities covered by the report to include starting a business, dealing with construction permits, registering property, and getting credit, and also paying taxes. Well, to put all of this in perspective, I have Andrew Nevin here. He's the chief economist with PricewaterhouseCoopers, PwC. He joins me live in the studio. Thank you, Andrew.
Great pleasure to be here, Tolo, as always.
Indeed. The last time we spoke, inflation was marginally declining, and now we are at 15.91%. Does it mean this government, there's something they're doing that is right? What do you think?
Well, I think there are a number of things the government's doing is right, but we're seeing inflation come down. It's come down for a number of months. The governor of the CBN has come out and said he can see us through to single-digit inflation next year. And of course, we got into this inflation because the Naira crashed out and the Naira is strengthening. So it's not a big surprise, but it's good news for us.
But single digits by next year, June or mid next year, many say it looks like a tall order.
No, I think the direction is positive. I mean, as I said, the Naira strengthening helps it, obviously. We've worked through the worst of the Naira devaluation. Remember, inflation's year over year, so it has to keep going up and up and up versus a year ago. So the bad numbers from a year ago, in a sense, get washed out after a year. So I think it's perfectly realistic that we could be in single digits. And just to finish, economic theory tells you that for an economy like ours, you want inflation about 7–8%. So that was what it was a number of years ago, and let's hope we're heading back to it.
But what about food inflation? That is what everybody wants to really hear about, how to get food on their table. Everybody wants to eat. The price of foodstuffs still seems to be on the high side. Many are saying we are expecting bountiful harvest. Maybe that's why we're still having these issues. Why is food inflation not coming down?
Well, we know that the country can produce a massive amount of food. I mean, we actually coined the term world food superpower for Nigeria 7 years ago. And there's a massive effort in the agricultural business. There's some big players, Dangote and Olam, many others that want to do things. But the biggest thing that holds up the food price is actually the infrastructure, like the whole chain, how to get the food. Growing it is not the biggest problem. The problem is how to get it off the farms, into the processing plants, into the consumer. So actually, investment in infrastructure is going to help food inflation.
Now, CBN is also optimistic that there's a little bit of confidence now, stability in the economy, and they might not be moving to looking at the monetary policy rates because that has also tightened the economy because the interest rate is on the high side. Well, reducing that at this time, do you see it working out?
Well, I think our view at PwC, we've been very, very clear about this. I mean, the CBN is doing a lot of the right things, and the finance minister, the federal government's doing a lot of the right things. But what's really hampering us right now is the low tax collection. So just to link it all together, we don't collect enough tax, so then we have a budget deficit, $2 trillion this year, $2 trillion next year projected. So the federal government has to go out and borrow that. It crowds out the private sector borrowers. They pay the high rates for to get that money. So the biggest single single thing that would really help us bring down interest rates is actually for us to be able to collect more taxes, reduce what the federal government needs to borrow, and let the private sector start to borrow too.
Talking of taxes now, I knew of the National Tax Reform Committee, which some from PwC is part of Taiwo Oyedele is part of that team, and Professor Abiola and all of that. But we've not really heard much. What's happening with it? And the minister came out lately to say hundreds of thousands of companies are evading. They're not even paying tax.
Right. So, but I think a lot's going on. So if I had to compare, we'll talk a little bit about the ease of doing business. But basically, 3 years ago we started to talk about it. 2 years ago we started to do something, and now we got a result, which we'll talk about in a minute. Taxes, we started talking about a year ago. Now I think we're going to start to see the results because everyone realizes we need to do it. But from the PwC perspective, the most important issue is don't go after the people already in the tax net. Don't go after people trying to do the right thing with small things or raise their taxes. You need to go after the groups of people who aren't paying their taxes. Bring them into the net. That's a little more difficult, but I think the federal government realizes that's the place where you can get the money you need. And it also creates fairness in business, because if one business is paying taxes and another business is not, then it doesn't work. And if you then go after the business already paying taxes, it just makes the situation worse.
Now we're looking 24 places up, from 169 to 145. Even the projection was supposed to be 20, so we even exceeded that. Starting a business, registering business, permits, corporate affairs commission, the ease of doing business, executive orders. We can go on and on. This thing seems to be working.
Yeah, so I think it's a real tribute. As I said, kind of 2 years ago, it got on the agenda. It was real work on it with PEBEC and the brilliant Dr. Jamoke, who's leading that. Real support from the minister, so Minister of Finance, Minister of Industry, Trade and Investment. Also, of course, the Vice President. Even the President has been talking about it. But it really happens in great detail at the state level. So you mentioned Lagos and Kano. Lagos governor is behind it, and there's real work going on at the detailed level. I mean, so it's not just what the governor does. It's what the civil servants do all the way through the line. How do you pay your taxes? How do you register a title? How do you start a business? All of those things need to be streamlined at that, and we've made great progress. So I think the important thing from our perspective is let's take the progress, the confidence that we've got, and just keep driving forward, because we need to get to not 145, we need to get to 100 and then 80 and then 60.
Indeed, 86, that would be a good one. Another thing Nigerians and even experts are worried about is the issue of debt. The minister came out lately to say that the threshold, we've not exceeded it, we are still doing very well, we're still within the limit. But, the Debt Management Office comes to give us figures, we got figures and all of that. People are saying, just yesterday, I think yesterday or the day before, $5.5 billion has been approved for another loan, to service the deficit. What do you make of this debt that we're acquiring?
Well, I think on the $5.5 billion US approval, our view, that's a good thing. $3 billion of it was existing debt, $2.5 billion is new debt. But what it means is that foreign investors are taking the debt, and so it's releasing some of the pressure on domestic investors. We don't have enough savings. And of course, you're saying, well, why borrow in US dollars? But we have oil. Oil's priced in US dollars. We have lots of oil. So, and the quantum is not that high. But go back to the tax issue. The reason we're borrowing is because we're not collecting the taxes. So the number one thing for the federal government to do, and at the state level as well, is get that tax net wider in a fair way, get the tax revenue up, take the pressure off the borrowings, and then we won't even be having this discussion, because we won't be borrowing $2 trillion, we'll be borrowing $1 trillion or $500 billion, and then we won't worry about it. I mean, we're still very low in debt to GDP. So we've got time, but we're very high in revenue collected to interest paid to revenue collected, very high, maybe the highest country in the world. So, but a little bit like the ease of doing business, there's now a focus on it. I don't think anyone doesn't know that this issue has to be addressed. We've been speaking about it. The finance minister's been speaking about it. The vice president's been speaking about it. The governors have been speaking about it. So now it's on the agenda, and I think, like the ease of doing business, we're going to make a lot of progress.
A lot of progress.
Sorry, just to finish, of course, they also announced that major program, the voluntary asset and income declaration scheme. So now people who are not tax compliant, they really face a choice. Do they, before the deadline, work out how to become tax compliant, or do they take a risk? And just given what we need to do as a country, it seems like you would be taking a big risk not to come in, because I don't think it's business as usual where you can't pay your taxes in Nigeria.
Now, all of these figures that we reel out, Nigerians really want, what they want to see is, my take-home pay will be enough to take care of me. Purchasing power being on the high side and living a good life. That is what Nigerians want to see. But many also say that there's a transmission period from the challenges we faced as a country and we moving out of it and letting Nigerians really feel that, yes, we're out of recession and we are doing well. Some people say it's up to 60 to 90 days. When will Nigerians start feeling the impact of all of these positives that we see?
Well, we know. I mean, we were talking coming out of recession in September, but of course we didn't really come out of recession. We did in the sense that the economy grew, but our population is growing much faster. So income per capita is still dropping. It'll drop in 2017. We just put out a report under our not optimistic, but sort of good scenario one. Next year we should grow close to 4%, so we'll have a little bit of positive growth in GDP per capita. So maybe we could call it stopping the pain. But what we see is if we're on the good trajectory, it's really, assuming there's no disruption for political reasons, or 2019, 2020, we'll start to see back like we had before, growth that's really in excess of population growth. Because our view is that the economy should grow about 7%. Population is growing a little less than 3%, so that means income per capita growing 4% a year. That's a pretty decent movement forward, and we want to get back to that. But we only see it because of the pain we've gone through and the structural adjustments in the economy. We really only see that coming to fruition about 2021 on that. But it is, next year should be better in the sense we'll stop going backwards.
Andrew, we're going to take a break and continue this discussion. It's really getting very interesting. Well, Andrew is still here. We'll take a break and Business Nigeria. We'll be back and continue this very important discussion, especially as it affects the Nigerian economy. Stay with us. We'll be back. Glad to have you back. I still have with me Chief Economist with PricewaterhouseCoopers, Andrew Nevin, giving insight into the new inflation rate just released by the National Bureau of Statistics and also issues surrounding the Nigerian economy, looking deep into that. Now, Andrew, just last week, the President presented a appropriation bill to the Joint Committee, Senate and the House of Representatives. 8.612 trillion naira is what we are actually looking at. This budget of consolidation, and looking at the size of this budget and what we expect, I don't know what you think. Is it really? Did it capture what you expect, or maybe the PwC reports? Did it capture any of it?
Well, I think the budget is what we expected. I think what people need to realize is 8.6 trillion sounds like a lot, but of course last year it was 7.2 and inflation's 15. So it's about the same size in real terms. It's not a stimulative budget, as a lot of the economists here have been saying. And I think the spending on capital expenditure again grew about 15%. It's a little over 2 trillion naira. So focused on the same things: agriculture, power, SMEs, infrastructure. So in a way, it's a continuation of the budget. But I think what people need to realize is, and the federal government knows it, the ERGP is very clear on this, that the government spending on capital projects, for example, is only there to catalyze private sector spending, because we need 30 trillion naira of investment. We get a little over 2 from the federal government in the budget, so it's just a start to all the investment that we need.
Now, like you mentioned now, power very, very important for industrialization and for the growth of an economy like Nigeria, because without power, MSMEs, small, medium enterprises cannot run business. Even big businesses, they can't even operate. Lots of efforts were made with regards to power, the privatization exercise, and all of that. But as of today, the report I have is we're generating, as of today, 3,446 megawatts of electricity for 180 million people, more than 180 million people. How do we get it right with the sector?
Well, I think in some ways, this is going to sound maybe contrary to the orthodoxy. Power is probably the easiest thing to fix. And I think sometimes people have this view, which is old, you know, the way Canada grew up with power. You have big grid, big power installations. But the reality is now there's so many different technologies that produce power. And that number you give, 3.5 megawatts, is not actually accurate because we have generators, diesel generators, not the best source of power, but we have off-grid solar, we have captive gas. So actually I think the estimate is about 15 megawatts. So we're not that far off. The issue, I think, sometimes is the government, again, wants to create this big grid mentality. I think what we need to do is actually embrace all of these kind of market-driven solutions at a smaller scale. And then if you want to sell power to your neighbor, you can do that. And of course, the Minister of Power came out the other day, and they've relaxed the rules around being able to generate power and sell it to larger customers. So I think they're coming to that realization. But you just take off-grid solar. What an incredible technology that can reach 100, all Nigerians. The one thing we know we've got is the sun. So I actually think the power thing, 2 years ago I was very, very worried about it, but I think it can be solved more easily than people think by just letting some market forces take over.
You know, we talked about private sector participation, which is also something that's happening even with our airports now, the aviation sector, some bit of concessioning and all of that. But investors have taken over the power sector. Many are saying they have not really put in what we expected. Many believe that they should still put in more funds to help reactivate our power sector.
Well, but that's the disco model, for example. If you take the way we did the privatization, that's exactly right. The discos were not well enough capitalized. They couldn't invest in it. We've got problems with not supplying enough meters. But I mean, the point I'm going to make is, in a way, the discos are only one part of the power system. There are many other players that can sort of fill in the gap. And there's, to name one company, Lumos has come here, for example, and there are others, small-scale solar, really at the household level. But there are other companies coming in on the solar to fix on that, not just for one household, but for an industrial park. And of course, we've got captive gas for industrial parks. So when the discos have to compete with that, it's going to drive everyone to better solutions. So I actually think the power is quite solvable.
You're so optimistic with that. Well, let's not look at state governments as we run up. State governments, many has also been coming out for their budgets, you know, and trying to meet up the fiscal year. That's the January, December. Everybody's trying to, so that things can be done as it's supposed to be. Now, but many of these states can't even meet up with responsibilities, paying salaries and all of that, low IGR. What do you make of this? This seems to be not on the good side at all.
Well, I think the last 3 years have been really difficult for the states. I mean, no state, perhaps Lagos or Rivers, was really prepared for the drop in oil price and the collapse in the revenue allocation. Let's just be honest about that. But people need to deal with the situation, and since that time I think states have realized they're really responsible for their own economic destiny. So if you look around, and I'll name a couple of states in a minute, not because they're the only ones, so they're just on my mind at the moment. But the other thing that's happened, of course, is oil's come back a little bit. So hopefully it'll give the state a little bit of breathing room, the states to work through some of their issues, but without them thinking that oil is going to keep them going. They still have to keep on this path of developing their own economy. But a couple of states I want to name today. Edo State just had a major investor conference over the weekend, very well attended. Governor Obaseki is doing, I think, very, very good things out there. And then one state I was not familiar with very much, but I've had a chance to sit through, Ondo State, very focused on bringing investment and leveraging their advantages. I mean, they're a little bit of an oil state, fantastic agriculture. They've got a great coastline, the longest coastline in Nigeria. So, but again, I've said on the show, we need 36 governors to be going in that direction. We see a lot of positive signs, but if we're honest, and I won't name any states in this category, but there are some states that are not quite with the program yet, and they need to get with the program if we're going to be successful.
As we round up now, one word on the Economic Growth and Recovery Plan implementation. What do you think about it? Many say it's too slow.
Well, again, it needs to catalyze the private investment, right? I mean, it's very clear on that. So I think we see massive interest in Nigeria, both by domestic investors, foreign investors, direct portfolios. So, I mean, we've made a lot of progress in that. People are working on ease of doing business. People are working on, bringing investment into the country. We still have a little bit of the way to go on the exchange rate regime. So we've made huge progress with the investor window and NAFEX and the investor window and the parallel market all coming together. We still have an official rate that's different. Big progress there. But I could see, and this is just a personal prediction, I could actually see we end up with a totally liberalized exchange rate regime in 2018 because we've got a much better foreign exchange position, the economy is improving, et cetera. So, I mean, overall, I think the message I would give is we've made quite a lot of progress in the last 18 months. We need to stay focused. So it's a little bit like Arsenal wins on Saturday. They can go out to the nightclub for one night and take pleasure in it, but they're on the pitch again the next Saturday. And we need to stay on the pitch and make sure that we move through to the end of this.
Indeed, we need to stay on the pitch to move to the end of this. Andrew's words there. Andrew Nevin's chief economist with PricewaterhouseCoopers. Thank you very much for your time on Business Nigeria, giving insights to these issues. Well, away now, Nigeria has conversed for a new strategy for the 8 countries, which will see the group extending its focus from economic strategies to boosting peace and security in the 8 nations that have a combined population of about 1 billion people. Vice President Yemi Osinbajo disclosed this at the D8 6th Ministerial Meeting on Industrial Cooperation in Abuja. Lara Folayan reports.
The group of 8 developing countries known as the D8 has often focused on economic development. At its 6th ministerial meeting in Abuja, officials say they are here to identify areas of collaboration for economic development. But Nigeria's Vice President Yemi Osinbajo is now advising that they also include strategies for enhanced peace and security in their regions due to their population strength of almost 2 billion people.
Diversify and create new opportunities in trade relations and enhance and provide better standards of living for our people. In the main areas that we have marked for cooperation, namely finance, banking, rural development, science and technology, humanitarian development, agriculture, energy, environment and health, we must begin to make concrete plans for collaboration and partnerships. We must use our strengths and comparative advantages to advance the good of one and all of our nations.
The D8 cooperation is to help member countries position themselves in the global economy. The group is now being advised not to renege on this vision, but to strategize and build on past successes.
There is a need to focus on areas of collaboration for economic development through professional treatment, diversification, and creation of opportunities in industry and trade, thereby providing sustainable living conditions for our teeming citizens.
The D8 says it presently has working groups known as task force with focus on 14 subsectors with the aim of aiding the advancement of member countries. This particular meeting is one targeted at growing investments in micro, small and medium enterprises. The Nigerian government also wants D8 nations to invest more in peace efforts so as to reduce insecurity and social upheavals around the world.
On the socio-economic front, we must constantly remind ourselves of the profound statement of principles which we made in our very first summit in Istanbul in 1997, which was that the main objective of the D8 is socio-economic development in accordance with the following principles: peace instead of conflict, dialogue instead of confrontation, cooperation instead of exploitation, justice instead of double standards, equality instead of discrimination, democracy instead of oppression. These principles are timeless and as relevant today as they were then. The D8 countries must remain a potent force for peace, for justice, and the observance of fundamental freedoms at all times.
The D8 countries include Nigeria, Bangladesh, Egypt, Indonesia, Iran, Malaysia, Pakistan, and Turkey. They represent more than 13% of the world's economy, with a population of about 1 billion people. Lara Folayan, TBC News, Abuja.
We're still trying to connect to get live feeds from the Nigerian Stock Exchange, but well, let's see how that goes. But before then, crude oil prices still slip further at the global markets on Wednesday after International Energy Agency cast doubts over commodities demand outlook. Now at the London market, the Brent crude drops to $61 per barrel. And for the OPEC basket Brent price, steadies at $61 per barrel. Analysts say oil prices have been pressured by global commodities sell-off due to weaker economic data from China. Well, that's a wrap on the show. Join us tomorrow for another incisive analysis. Well, I leave you with the figures of the exchange rate as it stands today. We apologize again for not bringing you updates from the Nigerian capital markets due to some technical issues. But for now, thank you very much for watching. See you tomorrow, God willing, for another episode.